What if the FHA 203K appraisal is low? If you are considering an FHA 203K loan for your real estate investment, you might be wondering what happens if the appraisal comes in lower than you expected. This situation can be a bit tricky, but understanding the process can help you navigate it smoothly. First, let's clarify what an appraisal is. An appraisal is an independent evaluation of a property's value. For FHA 203K loans, this includes both the current value of the home and its potential value after renovations are completed. The lender uses this information to determine how much they are willing to finance. Now, if the appraisal is lower than anticipated, it can affect your loan amount significantly. The loan-to-value ratio is a key factor here. For FHA loans, the maximum loan-to-value ratio is typically 96.5%. If the appraisal comes in low, the lender may reduce the loan amount based on this lower value. This means you might need to pay more out of pocket for both the purchase and renovation costs. Another option is to renegotiate the purchase price with the seller. If the appraisal shows a lower value, you can ask the seller to lower the price to match the appraised value. However, this can be challenging if the seller is not willing to adjust the price. If you want to proceed with the original purchase price despite a low appraisal, you will need to increase your down payment. This means covering the difference between the appraised value and the purchase price out of your own funds. In some cases, if the appraisal is significantly lower, you might consider canceling the contract. If you included an appraisal contingency in your offer, this gives you the option to back out without penalties. For real estate investors, managing risks like low appraisals is essential. Always include an appraisal contingency in your purchase contracts to protect yourself. This way, you have a safety net if the appraisal does not meet your expectations. Additionally, careful planning of renovations is vital. Ensure that your planned improvements will increase the property's value enough to justify the loan amount. Keeping financial flexibility is also important. This allows you to cover unexpected costs or a reduced loan amount without too much stress. In summary, a low appraisal can impact your investment strategy, but knowing your options can help you make informed decisions. Understanding the appraisal process and having contingency plans can help you navigate potential challenges with FHA 203K loans effectively.